Hi everyone, today I talk about 3 stocks to buy in February 2020. This is my favourite video of the month that I do, and I talk about the 3 stocks I'm most likely I'm going to go buy in the next month. And recently, obviously the stock market has done unbelievable. I'm sure we're all doing pretty well in the stock market. And because of that, the stocks are at 52-week highs. I would say the stock market in general is a little bit overvalued, and over the last month, well, the 2 months really, I've been building up my cash pile quite a bit, which means I've got a bit of cash on hand to go buy some stocks. So I'm kind of waiting for the right prices, and I'm kind of waiting for a pullback in general. So that's something to consider. I do want to nibble at a few stocks, and the 3 stocks I'm going to talk about are probably the 3 stocks I'm going to just nibble some shares at, because in January I actually didn't buy any stocks at all. So I do want to kind of just keep topping up the account with some new shares in. So I do want to go buy something at some point in February. And another thing is earnings season. So with earnings seasons and the next 2 weeks being so busy, I'm sure there's going to be a good company that's going to miss earnings by a little bit, and some bad news, and it'll bring the stock down. So I am kind of like waiting to see what happens in earnings season, and then depending what happens on earnings season, I might buy a stock if it goes down at the right price. If not, these are 3 stocks that I would probably buy as well, or if not, I'd probably buy more of them if there's not a stock that does go down. Number 1 is Disney, which is a stock I started buying in December of 2019, and it's a stock that I opened up mainly because of their involvement now with Disney Plus. I want to build this position up a little bit, and at the moment it has come down a little bit off its 52-week highs compared to everything else. So it's in a nice little steady discount, which kind of tempts me to nibble and buy some more Disney shares. Now, I bought Disney shares for a couple of reasons. The first one being the films being a little bit more aggressive. I think that when we consider that they've had the Star Wars, which obviously didn't do as well as box office as what we thought it would, but Frozen 2 definitely smashed box office. So I do expect Disney to have a strong quarter from them two, them 2 films really. Theme parks wise, I expect theme parks to still be posting some good numbers. They're obviously improving them quite a bit. It'll be interesting to see next quarter now with Disneyland in China getting shut down because of the coronavirus. I'm sure that will affect Disney in the next quarter, but for now, when we look at the quarter coming up, I'm sure it'll have a strong one with the films that have come out. The theme park should put in some good numbers as well. Obviously with Disney you get the strong brands. I think you forget how many brands that Disney actually own right now, but them brands are fantastic. And obviously the big thing that pushed me over the line to go buy Disney was the new Disney Plus, and I think that will probably smash numbers as well in this first quarter, and as it rolls out worldwide, I'm sure that will only help Disney going forward with the revenue growth. And I'm a big fan of Disney Plus because I think it could be the biggest streaming service out there when we consider how many networks they own, the amount of characters they own. We only have to look at what the Mandalorian series did for Disney, and I think there's an Obi-Wan Kenobi series announced further on in the line as well. And it just with all them brands, all it takes for Disney to do is go, oh, we're making an exclusive Disney Plus TV series of Spider-Man or something, and everyone's like, oh, I'm going to go get it. It's at a cheap price as well when we consider Disney Plus compared to Netflix. So because of the strong amount of brands that Disney own and what they're able to do now with this Disney Plus platform will be amazing. And I think they've also made some good purchases of other companies throughout the last year as well. Obviously it's going to hurt the EPS and balance sheet slightly over the next coming years, but when we look long-term investing 2 to 5 years down the line, I think it will really pay off for Disney, and they've been really good decisions. Now, one of the only negative things I've seen about Disney is the P has gone slightly high compared to what it has been, and I think that's quite fair when we consider what other stocks are at compared to Disney. Some stocks that are growing at like a 1% revenue rate, they're like trading at a 30 plus P, and Disney's still at like a 22p, which is pretty good. And when we consider Disney is probably going to be growing as much as it has ever done now with this Disney Plus platform, you only have to look at the revenues that Netflix was able to do. Disney Plus could be massive, and this could put the revenues for Disney at the highest growth for a very long time. So I think that is not getting factored in as much as what it should do. So a P of 22 for Disney, I still see being pretty decent really. So I'm not too fussed on that P range, and like I say, I still think it's at decent prices, and it's a position that even if it was to go down, I would not mind building it into one of my top 3 positions in the stock market right now. So number 1 is Disney. 2 is a stock I covered 2 weeks ago in a pretty deep dive, so I won't spend too long on it, but it's a stock called Pinterest. And Pinterest is a company that I really like at the moment because it's pulled back, it's on a little bit of a discount. I would like it to go just slightly lower before I do get in, but it's nearly at the price where I would want to buy this stock. So it would only take some little bit of bad news for it to go down. It is a recent IPO, and that's why it's a little bit choppy. But at the same time, it's an IPO that is forecast to make profit in 2020. So when we see a lot of IPOs like are losing so many millions a year. Pinterest, total opposite. It's a nice profitable business. The balance sheet as well is absolutely clear with no debt on, which kind of says to me as well is it's a potential for a big company to come and buy it out that wants to get into the social media side. It has had a little pop recently because it did take Snapchat over as the 3rd biggest social media platform in the US. So it is growing absolutely huge, and with that, no debt on the balance sheet, it does seem like a good company for someone to buy out that wanted to get into the social media industry. User growth is fantastic, and the big thing with Pinterest right now is that international user growth is growing bigger than the US. And this is one thing they need to improve on, because when we look at how Pinterest makes money through adverts, their US kind of monetization is really good. The big problem with Pinterest is its international side of it, and that needs to improve. And the good thing is that management know that's where they need to improve, so we're going to see that kind of improve over the next year, 2 years, and hopefully that will start catching up the US side of it from improving how much money they make from that ad per revenue. So when they start catching up, that it's just going to increase the revenue and EPS. And I think Pinterest is quite an easy money stock because management know where they need to improve, we know where they need to improve, and it's going to be easy for them to improve that. So going forward, I mean, Pinterest is forecast to be like making 30+ revenue growth year over year. And it's quite easy to see how it's going to do that. And I just think at the moment it's quite an easy money stock. The only negative I do have with Pinterest is its price to sale is quite high. That's the only thing that does slightly put me off, but it is at the lowest price to sales ratio that it has ever been at right now. It's starting to get a bit more to attractive prices. And when we consider the growth as well, and it's going to be a profitable company, doing over 30% revenue growth year over year. Not many of them companies out there are that cheap, so sometimes some stocks do deserve to trade at a little bit more of a premium. And when I think you consider the growth that Pinterest could have with actually no debt and making profit, I think it deserves to be at these sort of prices right now. So Pinterest is one that I might start adding into my portfolio in February 2020. And number 3 is a stock that I already own. I started buying this stock in 2019, and Carnival Corporation is a cruise company which has, I think could have some problems with the coronavirus. Whenever we see something like this, a lot of travel companies do get hit, and Carnival has already had that recently. So if it does, get worse, then I'm sure Carnival stock will start to feel it. But this stock is just one that's been crushed for quite a long time. I think since 2018, and that's when I've started to get tempted to go buy it. Carnival, for me, the reason why I buy it is because I think management do a fantastic job. I think that when we look at the amount of brands that Carnival own is really good. The price, I think I see some good upside in the price. I see about a 30 to 50% upside in the stock price as well. It is at a really low P, extremely stupid P at the moment. So I think that shouts it's undervalued right now. And as well as that, the dividend yield is over 4%. And at the moment, there's not many dividend companies at these 52-week close, which is how I like to get into dividend stocks, is when the stock price is at 52-week close, so we get the higher dividend yield, and then hopefully we get some gains on the stock price as well. There's not many out there apart from this one and Walgreens at the moment, and those are 2 dividend companies that I own. I own a few more than that, but those are the 2 at the moment that are at decent prices. So Carnival for me is still a really good company when we consider everything that's going on. It's still going to carry on growing its EPS, its revenue still going to carry on growing. It's made good investments in improving its ships, having more ships as well. So Carnival overall, management have done a great job, and I just think that Carnival is extremely undervalued, and I'm quite happy to keep adding into Carnival stock to just get that dividend yield, and I mean, if it keeps going down, it's just going to make a higher dividend yield. And as well as that, I think the stock price is just massively undervalued as well. So I could really see getting some stock price gains from this stock as well. So Carnival for me might start climbing up my list a little bit more now, because it's still at prices that I don't even know why it's at these prices. So I'm definitely going to be buying more of these shares. It just seems to get hit all the time by little short-term things about travel bans, and now a virus, and now previously it was like oil going up. So it's one of those things, like, they just keep getting hit by short-term things, but it's a company that should be a lot higher than what it is right now. So I will buy a little bit of Carnival. I did consider Walgreens as well, but for me at Walgreens right now, the growth has really slowed down a lot more than what I thought it would. So I'd rather buy Carnival over the moment over Walgreens, just because they are still going to easily be growing them revenue and EPS compared to Walgreens. So for me, Carnival is number 3, and I might buy a few more shares of Carnival over the next coming weeks. So guys, those are the 3 stocks for me to buy in February 2020. Let me know down below any stocks that you're looking to buy. I'm always interested to hear about some new stocks or other people's opinions in general in the stock market. I hope you enjoyed the video. I hope it was helpful to you. If you could give the video a like, that would be absolutely amazing. It helps the channel and the video out absolutely loads. And I'll see you in the next video.